Hello guys, welcome back to What's Trending Crypto. To find out about future update on trends, make sure to hit the subscription notifications bell. Okay. Let's talk about what's trending today. SEC Gensler doesn't have much to say about Ripple or XRP, except this. The Gary Gensler-led Securities and Exchange Commission, SEC, has repeatedly aired its concerns about spot Bitcoin exchange-traded funds, ETFs. In fact, the chairman believes there is a lack of infrastructure designed to prevent fraudulent and manipulative acts and practices. According to the agency, this wouldn't serve the SEC's intent to protect investors and public interest. This is all I ask. In a recent interview with Fox Business, Gensler again put forward his perspective given the growing uncertainty on the regulatory front. Especially since different applicants or funds including Grayscale, VanEck, etc. haven't satisfied the requirements of the regulatory watchdogs. Gensler reiterated his position this time around, stating, "I continue to say, come in work with the SEC, register under the securities laws. It's probability weighted, but you've got 75 or 500 or thousands of tokens on your platform. It's pretty unlikely none of them are a security. For a Bitcoin ETF to win the day, its issuer must establish what the SEC calls a surveillance sharing agreement with another major, compliance-minded market upon which the asset trades. Bitcoin futures trading on the Chicago Mercantile Exchange, CME, seemingly fit this model. CME has had a regulated market since 2017, as per Gensler. On the contrary, the latter, spot ETF, apparently doesn't quite possess the framework for underlying. Having said that, different critics of BTC futures ETFs have pointed the possibility of using them for pricing as opposed to spot Bitcoin. This could lead to underperformance. Futures tend to trade at a premium to the underlying asset, though they could trade at a discount. SEC v. Ripple. The SEC have pursued Ripple over claims that XRP is an unregistered security. On the contrary, Ethereum was granted a regulatory green light, with ETH now well considered as being not a security. When asked about the same in the aforementioned interview, Gensler refused to comment in depth. However, he did say that the conceptual framework was the public investing money, anticipating profits, on the efforts of others. He added, "Raise money from the public issue side is a basic bargain of full and fair disclosure and anti-fraud protections. And you register with a government agency called the Securities and Exchange Commission, and that's really what we're trying to do is help continue with that basic bargain." SEC's chair added, "We're technology neutral. If people want to invest or speculate in this field, then these tokens and most importantly, the platforms the trading and lending platforms come in, register, do it within the law, not trying to skirt the law." Different users on Twitter have their dissatisfaction with these responses. For instance, Liz Hoffman, an executive at Wall Street Journal, believes that Gensler is throwing shade at crypto companies. Decoding if XRP will reach the $1 mark after Ripple's recent win. As the lawsuit between SEC and Ripple drags on, XRP seems to be benefiting from it. Since December 2020, when the lawsuit began, people have been assuming that the end of XRP is near. However, of late the notion has been changing as courts continue to rule in favor of the crypto company. Ripple wins it again. On the 12th of March, the district judge allowed Ripple to use a fair notice defense by striking down SEC's motion. This gives Ripple the opportunity to argue on the grounds that it was the SEC that failed to inform Ripple about how the sale of XRP could violate the pre-established laws. Following this, XRP went up the price charts. It seems that Ripple is certainly gaining from the ruling. Apart from winning the favor, its token XRP also won investors' support as the altcoin rallied by 9.06% within 24 hours. But, it's important to note that the rally lacks conviction. Since this was a euphoric rise and not an organic rise, on-chain performance did not exhibit any positive change either. Transaction count on the network barely moved at all, which indicates that regardless of the rise, people did not participate in transactions. The month-long slippage has led to less than 1.4 million transactions being conducted on-chain. This lack of confidence could also be the result of the high volatility observed in the case of XRP. Being at its 5-month high, the volatility could be keeping investors from making a move out of fear. However, with the effect of Ripple's lawsuit judgment wins and XRP's relatively higher market value of 1.1 to 1.2, one can't rule out the possibility that investors could continue flocking in towards the altcoin. Furthermore, given the coin has managed to maintain the critical support of 71 cents, investors are still betting on the possibility of XRP returning to $1. Other trend we found. As shorting demand decreases, this is what Bitcoin has in store for investors. The price action of Bitcoin hasn't witnessed much stability in the last few weeks. The constant fluctuation in price has frustrated the market to an extent where a section of investors is actually wishing that the price falls further down. Shorts on the house. On-chain data has indicated that there has been quite an increase in investors looking to short the King coin in the last couple of days. That goes to say about the significant demand for short interest in Bitcoin. This shorting interest has risen by 329.66% in the last week alone. And the consequences of the same have been visible on the King coin's performance. Due to the recent shorting, the average funding rate has turned negative. The indicator in the chart below is revisiting the negative zone, which is a good sign. Notably, around the first week of March, funding rates were worse. It's also interesting to note that up until the first week of March, the crypto-margined futures contracts were observing a downtrend. Unlike stablecoin margined futures contracts, crypto-margined contracts are vulnerable to a price fall. In such a situation, not only do they lose their profits, but they also lose the value of the asset. Stablecoin margined contracts, on the other hand, are immune to losing value. These are only preferred by long traders. Shorting them leads to immediate liquidation since they can't be hedged. As a result, crypto-margined contracts came down by 27% in 10 months. However, their recent increase might be indicative of the fact that investors are gaining confidence in Bitcoin once again. Otherwise, there is no reason investors would dare to pull off such a stunt in the midst of a bear market. Uptick on the charts. Secondly, backing this confidence is the aforementioned negative funding rate. The dip in funding rate is actually a good sign for investors since they indicate buying signals. Multiple funding rate bottoms have been followed by a price rise in the past, although those dips have been much more significant. Regardless, if the indicator's historical tests play out as per expectations, one can expect the price to rise in the coming few days. Thank you for your time and make sure hit the subscribe button for future update on what's trending.